When the Bureau of Economic Analysis announced on Thursday, July 28th, that gross domestic product shrank by 0.9% in the second quarter, the economy was teetering on recession. But stocks rose sharply by 1.2% that day and another 1.4% the following day. You see, the bad news was no surprise. The real surprise was that the Federal Reserve of Atlanta's algorithm for estimating quarterly economic growth had been more accurate for months than consensus forecasts by leading economists. The Fed's Robo-Economist bested the nation's best economists at predicting the quarterly rate of growth. The Fed's GDP Now, a growth forecast, is updated 2 or 3 hours after the government data releases throughout every quarter. As the end of a quarter nears, GDP Now's prediction is designed to come closer to the actual growth rate announced by the BEA. Trouble is, GDP Now predictions are sometimes wildly wrong. Though consensus forecasts of economists are far from perfect, the humans have been more reliable than the GDP Now. Until now. Beset by multiple anomalies, including supply chain disruption, suddenly declining demand for inventory, and Fed tightening, the GDP Now estimate was more accurate than overly optimistic consensus forecasts by leading economists for nearly an entire quarter. There are 2 highly credible surveys of leading economists, a quarterly poll of 60 economists by the Wall Street Journal, and a monthly survey by Blue Chip Economic Indicators, cited by the Atlanta Fed, along with its weekly updated GDP Now algorithm. Compared to the consensus forecasts from these surveys of professional economists, the Atlanta Fed GDP Now algorithm has been closer to the actual GDP figure, which was released on July 28th by the Bureau of Economic Analysis. To be clear, the actual GDP for the second quarter came in at a decline of 0.9%. The Wall Street Journal's consensus forecast of 60 leading economists published July 17th expected growth in the second quarter to come in at about 0.4%, 1.3 percentage points higher than the actual result. The GDP Now forecast was off by 0.3%, much closer than either of the 2 widely followed consensus forecasts. In this period of concurrent anomalies, forecasts by GDP Now were much closer to reality since early May than the forecasts for 3% growth that human experts stuck with for months and did not revise lower until July, and then to 2%, nowhere near the negative actual rate of growth announced on July 28th. We're not saying that the GDP Now forecast is some kind of breakthrough in predicting the economy, but if the algorithm is better at predicting quarterly results in periods of high financial economic uncertainty, it would be good to know. Tracking developments like this is just one way a financial professional helps you make long-term investments amid a changing world.